And that's it for my radio show for today. I'll see you on the charts tomorrow. Hi, I'm Phil Grandy, philsgang.com. I just finished my national radio show. It's on every day during the week, 3 to 4 Eastern. You can see it right on my YouTube channel, or if it's in an area where I'm on a station. Okay, let's get started. Today we're talking about how you can take gold and have it as an indicator to help you what's going to happen with the market, okay? All right, first though, let's talk a little bit about what's going on. We're being lied to every day, and they're telling us the economy is doing good, and they point to the stock market, okay? They keep saying, here, listen what they're saying. This again was today. Listen.
The economy is strong. It's getting stronger.
Okay. Then we hear,
the markets are telling us that things look good.
The stock market is indicating things will get better.
The stock market doesn't indicate anything about the economy. It doesn't. It just doesn't. Let me explain. They've been lying to us and making sure that you look at the stock market as the economy. Well, the stock market, what it does, when you buy stock of a company, that's how a company raises money. To take that money, do business investment, pay down debt, or whatever they want to do with that money. They raise money by selling you stock. That's the function of the stock. It has nothing to do with the economy. What is the economy? The economy is profits of the company, earnings. If they increase, earnings go up. What else? Economic GDP growth. If the economy's good and people are all buying, and that quarter they sold 1,000 boats, then hopefully the next quarter they have to make 2,000 boats because the economy's doing better. So they're going to have to replace the 1,000, and they make another 1,000, anticipating they're going to double their sales. That's economic growth. Let me show you how they're lying to you. In 2008, right here, 2008 to 2012, they were putting stimulus money in to push the stock market up. The reason why, because the economy collapsed, right? The economy fell down, collapsed, and they knew they couldn't get any earnings because they couldn't get any profits because people were wiped out. They lost over, $12 trillion in stock equity. 13 million homes were in foreclosure. 8 million people lost their jobs. There was just no money. So how could they build earnings? You got to have people spending and to build earnings and economic growth. So they put in what they call QE1, QE2, the twist, which is QE3, QE4. They did this all to push the stock market up. And then when it came to 2012, the economy was doing worse, and the economy started to fall. What's the economy? It's corporate. Think of earnings, think of profits, corporate profits, and economic growth. Again, I just explained, is producing more goods than you produced last quarter. Well, here's the combination. They're going down. And right now where we are, 2020, is continuing to go down. In fact, if you look at the quarter that they're claiming was the best quarter we had in a decade, what a lie that is. Look, here's the quarter. Stock market going straight up and the economy going straight down, which means corporate earnings are going down. Corporate earnings are down about, overall, down about 38%. Bank earnings alone are down 40%, which drive the whole market, okay? So you got corporate earnings negative. They're negative. They're going down. And economic GDP growth, we're not growing. In fact, we're going nowhere. How can you grow? If companies aren't making profits and they're not putting the money into business investment to buy new machinery, new equipment, so that you produce more, so that you get a wage, and from those wages you spend, and spending is 72% of our economic growth. We're not growing. All the money is always going to the same place, to the CEO, to buy stocks to artificially push his price up. And that's why you see the stock market going up and the economy going down. But they lie to us because they want you to look at the stock market as the economy. And they knew they could get away with it because they knew they got away with lying to us. Remember the architect of Obamacare. Thank you, Obamacare. And Remember he said we could have never accomplished Obamacare unless people were stupid. Thank God Main Street people were stupid because they believed us. Well, that they're using the same thing now. They're saying, God, thank God people on Main Street are stupid. They'll think the economy is the stock market. Well, here it is. It's not the stock market. That's a bold-faced lie, and they've been using it. So I'm going to help you with gold. Gold's a great indicator. Let me explain. Oops, here, instead of switching charts, let me do this here. Let me check this and extend this so it save me time not switching charts. So, okay. So let's go back to the economy. Okay, let's go back. When the economy was going up, right to this point here, this was when we had the 20% correction in the market. That was in September 2018, which I projected would happen on January 16th, 2018. I said, I have it recorded where I said, everybody mark down in your log that Phil Grandy said, here, January 16th, this was the beginning of the crash of the market. Anyways, so gold was going up. Now, what was gold indicating? If it's going up with the stock market, what's it indicating? It's indicating the next leg down is going to be down. The next leg is going to be down. That's what it's indicating, okay? And remember, gold acts as a sentiment, okay? In other words, when the market's going up and gold is going up, it's telling you the market's being pushed up artificially, and the next leg, remember, the market is forward-looking. Gold is telling you, looking forward, the market is going to come down, and it did. It dropped by 20%. Remember over here, when the market went down, okay, this is when the virus hit, and the market, that was in February, went down to March, about 42%. We had the big crash. Well, guess what gold was doing there on this one? Gold was going down with the market. Now you're going to say, well, wait a minute. Gold was going up, saying the market was going down. What's going over here? The gold was going down, so that was indicating what? The market was going to, the next leg would be up, and here it is. It was correct. Why was that? Why did they indicate the stock market was going to go up? Okay, well, it was simple because again, when the market was collapsing because of the virus, remember, markets are forward-looking. So when the president decided to do the PP program, the CC program, the DD program, and printed trillions of dollars, pushing it into to the economy, okay, it takes time. So the smart investors knew with all that money coming in, it would finally kick in and the next leg of the market would be up. So that's why they were dumping their gold, anticipating going forward the market would go up. It would respond to all that stimulus. And remember, when you put, just like you put an interest rate, they raise rates, it takes like 18 months before it gets to the system and you see in the stock market. It's the same thing when you do stimulus. It doesn't turn the market around. If he announces he's going to do the PPP program, the market just doesn't go up. It takes time. So gold, people are getting out of the gold anticipating what's going on. And we were right. Gold went up. Now, guess what's going on now? Gold is going up again. Okay, so gold is going right up with the stock market. Well, what's that indicate? Again, they know the stimulus is going to run out. They know the next leg is going to be down. And that makes sense too, because if you recall, in July, where we are right now, all those people were getting paychecks from the government. They're making more money staying home than they are now. That's all gone. And all this stimulus is going to run out. That's the only thing pushing up the market is stimulus, okay? So gold, people are buying gold knowing the next leg is going to be down because the stimulus is going to be over, pushing them. Just like here, when the market was going down, they were selling their gold knowing the stimulus would push the market up, and it did. Here, gold's going up with the market because they know the next leg, the market's going to go down because the stimulus is over. You see how it works? Gold is forward-looking, just like back here again. The market was going up, all on BS, and gold was going up, indicating that going forward the market would drop. So just think the market is a forward the gold is a forward-looking indicator, okay? And so you'll see now, because gold's going to tell us the market's going. Now, how do we know it's going to drop exactly? Well, that's what my charts tell you. My color-coded chart is beautiful for that, okay? My color-coded chart tells you when it's red, the market's going down. When it's green, the market's going to go up. Look how it turned red right here, and we were short. We were short the market all the way down, okay? And then we caught the market. Right now, we're in the market. We're catching beautiful rallies in the market, but it'll turn red again. And when it turns red and breaks this point right here, it's over. The market's going to go down like it did here. So this chart is our color-coded chart. It works beautifully. It's never wrong. It always tells you when to get in, when to get out, and we have a special feature that we put on here. We'll show you how to use this. We have a special feature which gives us another color, which gives us an advance warning, yellow. So even while it's green, it's telling us, let's be a little careful. We could change colors. Isn't that wonderful? I mean, it tells you, like right here, it's going up green. Be careful, it could turn red here. It's a great little indicator, like right here, right? It said turn yellow, it could change, and it did, red, right? So this is such a wonderful tool. We'll give it to you free for 10 days. You get instructions on it for 10 days. You get a membership for 10 days, all free, and you'll learn how to use this. There's no better tool than this. If you combine my color-coded chart, when it tells you when to buy, when to sell short, with gold, watching gold indicator, remember it's forward looking, this will just make a big difference in your trading. By the way, if anybody's brand new, you really don't know anything about trading, we have the best trading academy, if you will, in the country. I believe it is. Okay, if you're a brand new person, beginner, you want to know how to invest in stocks, and just come to us. Okay, it's only $39.95 a month. Not $5,000 a month, $2,000 a month like everybody else charges, and you're going to learn more there than you would in Harvard, okay? So check it out. All right, remember, you get a free membership for 10 days. You get the color-coded chart for 10 days, and you'll say, God, I wish I did this a long time ago. All right, I'll see you on the charts. And by the way, remember to hit like, okay, and hit subscribe so that you get a little signal every time that, we're updating this, okay? So just please hit subscribe and like. Would really appreciate it. See you on the charts.